class. इसके अलावा मेजर प्रॉब्लम कॉन्ट्रैक्चुअल एग्जीक्यूशन ऑफ वर्क एंड फर्निशिंग सप्लाई, जिसकी डेफिनेशन लॉ में नहीं है और जो मर्जी चाहते हैं वो सेकंड शेड्यूल से बाहर जो चीज़ होती है उसको भी प्रिज्यूम कर लेते हैं कि इट्स एग्जीक्यूशन ऑफ अ कॉन्ट्रैक्ट और फिर उसको टैक्स कर देते हैं. दिस इज इम्पॉर्टेंट कि आइदर द एंट्री शुड बी डिलीटेड or if it cannot be deleted, it should be clearly defined in order to avoid litigation. Reimbursement of service cost out of pocket expenses, ये recently generated issue है due to SRB circular mainly, और उसकी वजह से और provinces में भी there will be a problem कि जो ऑडिटर या दीगर लोग आपको आउट ऑफ पॉकेट एक्सपेंसेस चार्ज करते हैं. SRB हैज़ क्लैरिफाइड परहैप्स एरोनियसली कि इसके ऊपर भी सेल्स टैक्स लगना चाहिए. व्हाट वी आर प्रपोजिंग हियर एज पर द प्रिंसिपल्स ऑफ लॉ, रीइंबर्समेंट कैन नॉट बी अ पार्ट ऑफ सर्विस. अकॉर्डिंगली इट कैन नॉट बी अ पार्ट ऑफ सेल्स टैक्स कैलकुलेशन बिकॉज इट टेंटामाउंट्स टू डबल टैक्सेशन. इसलिए कि जो आपको आउट ऑफ पॉकेट एक्सपेंसेस चार्ज किया जाता है उसके ऊपर ऑलरेडी सेल्स टैक्स लग चुका होता है इन मोस्ट ऑफ द केसेस, और इन मोस्ट ऑफ द केसेस वैल्यू एडिशन नहीं होती, तो इसलिए देयर इज़ अ नो क्वेश्चन कि इसके ऊपर आप सेल्स टैक्स की कैलकुलेशन के लिए अकाउंट फॉर करें. रिटेंशन ऑफ रिकॉर्ड, ये अनयूजुअल एंट्री है ओनली इन द सिन सेल्स टैक्स लॉ, कि बाकी लॉज में रिटेंशन ऑफ रिकॉर्ड फॉर 5 या 6 ईयर्स हैं, लेकिन सिन सेल्स टैक्स लॉ में 10 ईयर्स के अकाउंट्स रिटेन करने और 8 ईयर्स के अकाउंट्स 8 ईयर्स की असेसमेंट हो सकती है. इसका मतलब ये कि आप 10 साल के रिकॉर्ड रखें, जबकि कंपनीज एक्ट में या बाकी लॉज में जितने भी लॉज हैं उसमें रिटेंशन ऑफ रिकॉर्ड 5 या 6 ईयर्स का जनरली होता है. लास्टली, all indirect tax SROs and rules are directly applicable from the date of issuance. This is the major issue. बजाय इसके कि मैं उसको शुरू में कवर करता, मैंने आखिर में कवर करने का सोचा to emphasize this to the media and everyone that this is the most important issue for all indirect tax laws. कि SROs as per section 137(3) of the income tax ordinance, the draft SROs are issued for comments by the stakeholders, and generally 15 days to 7 to 14 days are allowed at least. और फिर इसके बाद फाइनल SRO आता है. इसकी वजह से फ़ायदा ये होता है कि उसमें कोई अपेरेंट एरर्स अगर होती हैं तो स्टेक होल्डर के कमेंट्स आ चुके होते हैं, एंड द फाइनल वर्डिक्ट इज़ नॉट जनरली सब्जेक्ट टू लिटिगेशन. ऑन दी अदर हैंड, फेडरल सेल्स टैक्स लॉ में आइदर फेडरल सेल्स टैक्स लॉ FED या सेल्स टैक्स में ऐसा नहीं होता. एज पर द लॉ देयर इज़ नो सच प्रोविजन, इसीलिए वो SRO इशू करते हैं और अगले दिन अप्लाई कर देते हैं. एंड सरप्राइजिंगली यस्टरडे से भी बाज़ औक़ात अप्लाई होता है और बाज़ औक़ात आपने अखबार में नहीं देखा हुआ होता तो वो अप्लाई नहीं. और इवन आई एम शोइंग द एनालिसिस जिससे आपको अंदाज़ा होगा अलार्मिंग सिचुएशन का कि वाई इट इज़ इम्पॉर्टेंट. दिस रेड एरिया जो आपके सामने आ रहा है कि डेट ऑफ SRO और सर्कुलर और इसकी इफेक्टिव डेट. पंजाब सेल्स टैक्स के रिड्यूस रेट की एक्सटेंशन हुई थी एज पर डेट सर्कुलर और SRO डेटेड 30 अगस्त 2017. वो अपलोड हुआ इन सितंबर एंड, and it is retrospectively effective from 1st July 2017. When we move on to transportation SROs and transportation related circulars, इन सब में यही पोजीशन है कि 1 महीने पीछे से एप्लीकेबल है. और हमने आगे का तो सुना था, पीछे से सुना था, ये बड़ी अजीब सी बात है. और पता नहीं लोग ये समझते हैं कि हमें इल्हाम होगा, हमें पे वही नाजिल होगी सेल्स टैक्स की, और जिसके नतीजे में लॉज हम अप्लाई करना शुरू कर देंगे. तो दिस इज़ द मोस्ट इम्पॉर्टेंट प्रपोजल कि लॉ में लिख दिया जाए कि 15 डेज प्रायर नोटिस होना चाहिए. जहाँ रेट का चक्कर हो वहाँ मैनिपुलेशन का इशू हो सकता है, मे बी इन सर्टेन केसेस, लेकिन अदरवाइज तो देयर इज़ नो सच इशू. ये तो सीधा फैसिलिटेशन का मसला है, और कल आपको फिर पकड़ेंगे कि डेट ऑफ SRO ये थी, आपने लॉ अप्लाई नहीं किया, इसलिए कि वो बैकडेटेड एप्लीकेबल है, रेट्रोस्पेक्टिवली एप्लीकेबल. एंड सिंस वी आर टेकिंग केयर ऑफ एंड गिविंग क्विक कमेंट्री एंड वी टेक केयर कि जैसे ही SRO इशू हो हम फ़ौरन कम्युनिकेट करें एज सुन एज पॉसिबल. अदरवाइज इट्स अ वेरी डिफिकल्ट टास्क फॉर अ प्रोफेशनल्स कि एवरी नाउ एंड देन दे सी वेबसाइट्स. Accordingly, अगर मैं आपको सुप्रीम कोर्ट की अच्छी वर्डिक्ट का कोट अनकोट करूं, तो I wish the law-making body shall frame the law after deliberation, which is the additional duty cast upon the law-making body in terms of Article 2A of the Constitution, and the same in accordance with the injunctions of Islam and doctrine of expectation of consultation, the Honorable Justice Chaudhry Ijaz Ahmed. Accordingly, ICAP recommends that the provision about previous publication, that is draft SRO, be inserted in all indirect tax laws, and final SROs be applicable from the next day of its issuance, and those SROs should be clearly published in all the leading newspapers and be placed on the media. This is important for transparency, fairness, equality, and minimize litigation. Lastly, इस साल मुझे ख़तरा है कि हर साल बजट में तो बहुत सारी प्रॉब्लम होती हैं, लेकिन अगर मैं कहूँ कि ये बजट की इमारत है और ये टिल्टेड ब्रिक्स हैं, तो ऐसा ना हो कि बजट की इमारत खड़ी करें हम इन अप्रैल और वो इंटरम गवर्नमेंट उसको गिरा दे, नई बजट की इमारत खड़ी हो, फिर इंटरम गवर्नमेंट जाए, इसके बाद इलेक्टेड गवर्नमेंट आए, वो उस इमारत को गिराए और नया बजट दे. एंड हर साल तो बजट में इश्यूज़ होते हैं, एंड इस साल ये 3 किताबों की तरह हम देखें. आई होप. फिर ज़ाहिर है प्रैक्टिकल प्रॉब्लम हर साल यही होता है कि प्रोफेशनल फेज द शो, पब्लिक एट लार्ज फेज द शो. देयर आर सो मैनी इंटरप्रिटेशंस फॉर वन पर्टिकुलर थिंग. बिग 4 के हर एक के अलग अलग कमेंट्स आ रहे होते हैं, बाकी लोगों के अपने अपने अलग अलग कमेंट्स आ रहे होते हैं, और हम प्रोफेशनल फेस कर रहे होते हैं और पब्लिक एट लार्ज फेस कर रहे हैं. आई होप हारून अख्तर साहब विल क्लैरिफाई दिस इशू. देयर आर ओनली 2 स्लाइड्स. एक तो ये है कि डिफ़िकल्टीज़, अगर मैं ICAP के पॉइंट ऑफ व्यू से बात करूं तो कॉम्प्लिकेशंस के क्या फ़वायद हैं. इन डेप्थ स्टडी हमें करनी पड़ती है. अपेरेंटली जॉब क्रिएट होते हैं और करियर ग्रोथ अपेरेंटली नज़र आ रही है. दिस इज़ नॉट करेक्ट एक्चुअली. नेगेटिव साइड ऑफ द कॉम्प्लिकेशन क्या है? कॉम्प्लिकेशन लीड द मैटर्स इन द अपीलेट फोरम एंड इवन कोर्ट्स. इकोनॉमिक ग्रोथ इज़ अफेक्टेड. और अगर मैं ईज ऑफ डूइंग बिजनेस पाकिस्तान को कंपेयर करूं विद वर्ल्ड ओवर, तो पाकिस्तान इज ऑन 156 नंबर. लास्ट ईयर ईयर अगो इट वाज ऑन 144 नंबर. 311 man hours are spent. This is the research based on the Pakistan Business Council, of whom I am a core committee member. These difficulties lead to increase in cost of doing business as well as inflation. और अगर मैं एक्सेलेंस की बात करूं तो there should be clearly understandable budget, ease of doing business, no major budget or petrol bombs, or not 3 budgets but just 1 budget. Purpose and positive thinking of ICAP is that minimum differences between tax machinery and taxpayer, least possible matters in appellate forum and litigation, which lead to economic growth including industrial revolution, जिसकी हर गवर्नमेंट क्लेम करती है, लेकिन एक्चुअल ग्राउंड रियलिटी इज जनरली डिफरेंट. पर्पस एंड this naturally will lead to more export and job, and this will lead to significant increase in cash. This is the basic area कि जहाँ हमें जॉब क्रिएशन की ज़रूरत है, कि इंडस्ट्रियलाइजेशन हो, ग्रोथ हो, और फिर जॉब क्रिएट हो. With these words, I am thankful to ICAP as well as other people who are hearing my discussion or research outcome, and I am also thankful to all my teachers, parents, professors, and other mentors for providing me knowledge, guidance, and courage. I am also thankful to Mr. Fatola who put me burden on my shoulder to lead this task force. I am also thankful to Indirect Tax Committee members who made my task easier. At last but not the least, I am thankful to worthy participants for enjoying this evening as man who sees tomorrow, that is the upcoming budget. Thank you very much.
Thank you, Asif. Now it's time for the second presentation, which will be on direct access, and for which I would like to invite on stage Haider Patel, a partner in Ernst & Young. Haider, please. Excuse me, gentlemen, there's been a slight change in the program. We'll start after the prayers. So, like, we'll be starting at 5:40. So, we'll be breaking for namaz. Inconvenience. So, we are starting. It's time for the second presentation, which is on direct taxes. And this will be delivered by Heather Patel, partner Ernst & Young. Heather, please come on stage and deliver the presentation. Thank you.
Thank you. Bismillahir Rahmanir Rahim. Honorable President of ICAP, Mr. Riaz Rahman. We have here former President of ICAP, Mr. Masood Naqvi, also here, Chairman of the TRIC, and Mr. Abid Shaban is also here, member of TRIC. Mr. Qadir Ahmed Saab, President Pakistan Tax Bar Association, is also here. Ashfaqullah Saab, our Chairman and also member TRIC, is here for this presentation. Fellow members, my seniors, Assalamu alaikum. It was once again an honor this year that not only ICAP nominated us for the Committee on Fiscal Taxation, but the chairman of the committee this time went in a different fashion, and he delegated work to, I think, 3 or 4 different groups, and he created task force this time for a more focused approach on tax issues. There was a group for direct taxation, which he requested me to head as the convener, and then we had Mr. Asif Kasbati, who headed the indirect tax task force. Then we had Asif Harun Saab, who looked at the anti-money laundering laws, and we had Adnan Mufti Saab, who looked at the provincial taxes issue. Am I missing any other task force? Yeah, task force on VAT. I think you were heading that part. Okay. So we had a series of meetings in each group. I think, if not wrong, I think the task force had at least 4 meetings where issues were deliberated across the country through video conferencing, and this was a very interactive discussion that we had in our meetings, with very, very divergent views coming from across the country. It was very interesting and a very challenging job to then converge all those divergent views into proposals from the institute. So I'll just take you quickly through some of the proposals. These are not all proposals, as Asif had highlighted that how many proposals there were and how many he has deliberated. Similarly, I have picked up about, I think, 25 issues, which I think it's less than 25, which I thought are worth discussing here. I'm sure that all of them are worth here, but because of the time constraint, we have to keep our discussion focused and to limited number of proposals. But all of you have the complete proposals, and if you need to discuss anything, I think you can do that in the question-answer session. So I have spread my discussions into 2 broad categories. Proposals for ease of doing business, or you can call it for reducing the cost of business proposals, and then some issues which are, we call it administrative issues in the law, or where we say the law requires rationalization. Those topics have been dealt differently, and last but not the least, a few issues on employee taxation area as well. Let me tell you that there are some critical issues in indirect tax, which of course the committee decided that these are the critical issues. We have deliberately kept that separately for the third speaker, who is going to give an overview, which is Asif Harun. We hope that by that time the Honorable Chief Guest will be here with us. So we have kept those issues deliberately and purposely for both indirect and direct taxes for Mr. Asif Harun to deliberate upon, and hopefully if the Chief Guest will be here with that time. So we wanted him to hear those out as well. So let me start with the first one on ease of doing business. We have been talking about this proposal in the past. So far it has not been heard, but this time I think we all agree in the committee that the level of acceptance at the top level is much better this time. We have had opportunities in the past to discuss these things, and we have positive vibes from the FBR as well as the ministry that things will be looked at differently this time. So the first issue is the taxation of undistributed reserves. As we all know, this tax has been there for some time now since this government came in. I think it came in with the first year budget, and it had been there. But previously, the difference was that it was only this tax on undistributed reserves was only levied if your reserves are in excess of 100% of your capital, and if you don't distribute 40% dividend. So there was every year ICAP and other bodies were constantly propagating that this should go away, and there should not be a double taxation of profits on this count. But unfortunately, through Finance Act 2017, whilst the demand for allowing bonus dividend through bonus shares was allowed, but the scope of the companies that will be affected by this has been quite widened, and now all public listed companies who do not distribute 40% of after-tax profit, irrespective of the size of their reserves, they are now affected by this law. So it has become a mandatory law to distribute 40% dividend. If you don't do that, then your reserves get taxed at 10%. So this is a harsh provision of law, and the ICAP strongly recommends that this tax should be abolished immediately. Alternately, the committee has suggested that if immediate abolition is not viable for the government, then the minimum required distribution should be reduced to 20% for only those companies that have not distributed dividend in the past, in the previous 2 tax years. Taking you to the next issue, I think this is quite a broad issue across the country, where exemptions are being now made tougher and tougher. By exemptions, I mean exemptions from collection or deduction of taxes. The time period for certificates has been curtailed under various sections, and as far as the industry is concerned, the biggest concern for them is the exemption on imports. Current income tax rules do not support issuance of exemption certificate for import of raw material by manufacturers starting new business who have gone into expansion in the current product or launched a new product. We'll discuss that in detail. These restrictions are severely hindering the growth in the country, because if you don't get exemption from taxes, obviously everybody knows here it's a cash flow issue, and your money gets stuck up. So your current account actually gets affected. Your current requirement for cash goes up because a lot of money gets stuck up in the shape of refunds. So another condition that has been put in there is that for qualifying for exemption, maximum import of raw material is restricted to the extent of 125% of the material previous imported and consumed. Now, this looks fair for a mature industry where you can expect that every year you can have a growth of 10% or 15% of production in a good year. But this does create problems for new industries which are picking up their sales in the beginning. They're picking up the production. Say a company has got a 6-month production in the previous year, and it's going now for the second year, and by the end of the first year it's now in full gear production. And when it goes for getting an exemption on raw material, it's stuck up because it will be measured against the imports of raw material from the last year. So if you have only imported 40% of your annual consumption in last year, then you are stuck up at 40. Maximum you can go is 10% higher than that. 50% you will go. So that doesn't look good. What we are saying is that there should be rationalization powers to the commissioner as well to look at case to case, especially to newly set up industries, because these are the type of companies who have done heavy capital expenditure, spent a lot of capital, and then if we are asking them to stuck up, a lot of money in their business in the form of refunds. That's not fair. The third one is the law requires minimum equal to higher of last 2 years tax liability to be paid in order to qualify for exemption. Now again, this one, if you have a higher depreciation this year of, or if you qualify for say a tax credit under 65E this year, then you are stuck up because you have to meet the minimum liability of the higher of the last 2 tax years in order to qualify for this exemption. So again, the industry is hit very badly, and we all know here, there are people sitting here who are in practice, getting refunds is virtually a nightmare these years. So these are virtual conditions that have put in through SRO 717 and through clause 72B, so which are quite unfair. There is also a condition being practiced, a practice being followed by the department, which is that when you are in a tax credit situation and you have claimed a tax credit under 65D or 65E, which is 100% tax credit for 5 years, the department, when it calculates your base tax, says that we don't have instructions to give you credit for 65D or E, because that is something that has yet to be looked into, that has yet to be assessed. So that effectively this pulls out all your benefit that's coming to you under in the shape of a tax credit. So this is totally unfair, and we propagate here that this should be, there should be some room on here. Then of course the high rate of 5.5% normal straight rate of collection of taxes. There are instances where there are reduced rates, but they are quite few now. So currently, in a wider issue, which is become a legal issue as well in courts, that collection of tax is treated as a final tax for all taxpayers other than industrial undertakings. Now, if you are in the service sector and you are importing equipment, a good example to quote would be the telecom sector, which is importing very large amount, a very heavy investment in telecom equipment. They can't get this exemption because they for somehow do not qualify as an industrial undertaking. So in their case, the department says that whatever tax you have suffered at source is your full and final tax, and they have carried out assessments by that. Now this is, mind my words, but this is sheer madness, I think, because the law says that the income arising out of the import will be treated as a final tax. Now there is no direct income to the service sector coming out of these imports, so there has to be a rational thinking on this. There is no need for the FBR to force people to go to the courts. The matter is currently pending, I think, at the tribunal, because the High Court directed the telecom sector to go back to the tribunal for a wiser decision, because there were conflicting decisions at the tribunal. So a lot of time is passing through, and the refunds are piling up. If you look at the financials, they've got huge contingencies and tax notes, which is not good for an industry which is so blooming and which is so promising and which is doing huge collection of taxes. So I'll just read out the recommendations of the committee. Restrictions in respect of issuance of exempt certificate for new projects, capacity expansion, formula and process changes may be removed, which will allow industrial growth in the country. Maximum volume restriction be at least enhanced to 150% of last year's raw material imported. Requirement to meet the tax payment equal to previous 2 tax years be abolished and may be linked with the payment of advance tax liability for the respective period. Specific instructions be issued to allow tax credit under Section 65D while working out previous year's tax liability for new established undertakings which are already under immense cash flow burden. This would help eliminate piling up of unnecessary refund for newly established undertakings who are otherwise not liable to pay 100% tax, who are not liable to pay tax due to 100% tax credit. And of course, the rate of imports should also be rationalized to ease the pressure of tax payments on the industries. And for the service sector, we propose that the law in subsection 7 of 148 should add that raw material, plant machinery, equipment, parts, or any other goods by any person for its own use. So if somebody is importing any equipment or something for their own consumption, whether they are in the manufacturing sector or they are in the service sector, that should not be treated as a full and final tax. Tax credit for industrial undertaking we have highlighted a few issues here. Expansion of plant undertaking a new project involves investment in factory building as well. So the committee has been recommending this in the past, and again this year we are recommending that factory building should be allowed as a admissible investment for the purpose of 65E and D both. Furthermore, tax credit under 65D is available only at the time of setting up of new industrial undertaking. No tax credit is given on subsequent expansion of such an industrial undertaking, since 65E restricts eligibility to companies formed before 1st July 2011. Expansion is also possible in industries units set up after 1st July 2011, because we are now in 2018 and we are looking forward that this credit will continue. As of now, it's applicable to investments up to 30th June 2019. But we hope that this will continue. So there has to be, there's a gap in between. If you are an industry which was set up after 2011 and you are an existing industry, then you are not eligible for any further tax credit. Whether this is intentional or unintentional, that has to be seen. But this has to be looked at from this angle as well. For exporters, they are also eligible for tax credits. If they are manufacturers, they are eligible to tax credit under 65B, 65D, and 65E. But the problem is that the mechanism for an exporter is that on the proceeds that they realize through normal banking channel, they are subjected to 1% tax. And because it's a final tax under 169, there is no mechanism at all available for them to go for an exemption certificate based on tax credit. So all the exporters virtually who are claiming tax credit under 65B, D, and E, they are virtually filing refundable tax returns. So ICAP proposes that subsection 5 of section 154 should be amended accordingly to allow powers to the Commissioner to grant exemption certificates from collection of tax by banks from the exporters. Group taxation, again, I don't know whether I should deliberate much on this or not, but this has been said since group taxation has come to Pakistan. The requirement is for a group taxation to be eligible, you have to be 100% owned subsidiary. So there are cases where, a company, if it gets delisted, in that situation, they may not be able to, achieve 100% shareholding because of, some unknown shareholders or something. But generally, we are saying that this restriction should be reduced to at least 95% for enabling such companies to qualify. Moreover, for claiming exemption from withholding and taxability of intercorporate dividend under clause 103A